Hey everybody, it's Eri from Tokyo. This is your cryptocurrency update from Japan. And if you're an XRP holder, this is a really special video. Come on, let's go. There has been an S-4 SEC form filed by the parent company of Tranglo. Tranglo, of course, is the company that Ripple took a 40% stake in. Now, these forms are filed as a requirement when the company is going to merge or be acquired. And if you watch my channel, I think you remember that I told you that Tranglo was going to go public. Now, Tranglo is under the Seamless Solutions umbrella, and they will use a SPAC, a special purpose acquisition company, infant, to do this. And this December 1st filing, it's telling us so much about the use of XRP. Sit back and listen carefully because the parent company Seamless has built strong relationships with regulators that understand the benefits of cryptocurrency and payments, and they have a very unique partnership with Ripple in Asia. On page 188, it says that using ODL and leveraging the digital asset XRP is one of the standout competitive factors for Tranglo. The ODL mechanism that Tranglo offers relies on XRP, and it generates lower transaction fees and Forex gains, which will help Tranglo capture more market share. Tranglo also passes a portion of those lower costs to its customers using ODL. Now, RippleNet has given Tranglo a way to build out across these core markets in Southeast Asia, and the integration with ODL is pivotal, it says, to its future development. Ending in June of this year, Tranglo had 5 companies that were relying on the digital asset XRP. They were GEA, Centbee, Eastern and Allied, People, and Kabayan Capital. At the beginning of the year, they had 91 customers. And then as of September 22nd, Tranglo onboarded an additional 59 new partners. They're up to 8 of these using XRP in the ODL funding process. And just some stats pulled out of this 250 plus page document. As of June 2022, Tranglo has processed 5 million remittance transactions. The average transaction right now is running about $322. Now, the total processing value for the first 6 months of 2022, ending June 30th, was $1.61 billion. 12.1% of that was ODL. And the revenue on that $1.6 billion is approximately $9.7 million. Tranglo charges 1% on average and can complete those transactions within 5 minutes. Banks are taking 3 to 7 days and charging 3 to 7%. For those first 6 months of 2022, those customers, just the 5 original that were using ODL, they accounted for 26.5% of the total remittance transactions of Tranglo. Now, here's something that's interesting. Tranglo's customers, which are businesses, are not U.S. persons. Access of these partner services by U.S. persons could raise regulatory issues under the U.S. law. While we are not aware of any pending regulatory changes which should prevent our partner from continuing to provide their services, we cannot provide any assurance regarding our partner's ability to respond to any such changes. If our partner, talking about Ripple, is not allowed to continue to provide their services due to regulatory changes, or if the customers or our partner fail to obtain required licenses, or comply with applicable regulations, and we are not able to migrate those customers to non-cryptocurrency based funding processes, our business financial condition and results of operations may be materially adversely affected. So you can see how much they really depend on ODL, but they have to cite that risk. Think about all those people who called XRP a scam. Who looks like the scam now? And how about those people who said, I like the company Ripple, but I'm just not sure about XRP? Well, it appears you weren't so smart after all. And we mustn't forget those who call XRP a security. Are you kidding me? This has utility. How silly do you look now? And Kramer, you just need to resign. We're talking about a company that is going to be doing over $2 billion in remittances, and 26% of those transactions are using XRP. And let me remind you that ODL, the on-demand liquidity that uses the digital asset XRP, is just one use case of currently hundreds, soon to be thousands of use cases. I think it's time for you to go to zero. You can bet Gensler will see this S-4 filing. Should the SEC get their way, millions of people will be hit directly in their pocketbooks with higher remittance fees. There is no protection except for the legacy banks charging 3 to 7%.
Chairman Gensler, welcome back to the committee. Good to see you again. The SEC, as we all know, has a critical role to play in protecting investors, maintaining fair, orderly, and efficient markets, and facilitating capital formation. Unfortunately, some of the SEC's recent actions and inactions raise concern about how well it's carrying out this important mission. Take, for example, the SEC's handling of crypto lending platforms like Celsius and Voyager. Celsius and Voyager were offering interest rates as high as 18% if customers would lend their digital assets to them. The firms would then lend that crypto to presumably other larger investors to make short-term bets on crypto markets. But once the crypto sell-off began, many borrowers couldn't pay their debts, and these platforms froze customer accounts. The SEC did take enforcement action against BlockFi for similar activities last winter, yet somehow let Celsius and Voyager continue through this spring when both companies blew up and found themselves in bankruptcy, with investors staring at billions in losses. Where was the SEC? And where's the SEC been in clarifying the rules of the road for crypto market participants? The chairman insists in his written testimony that, and I quote, the vast majority, end quote, of crypto tokens are securities. But he's also acknowledged that Bitcoin is not. Now, presumably, that's because Bitcoin is so thoroughly decentralized. But that naturally raises the question, where on the decentralization continuum does a token cease to be a security? Most of these tokens don't even have a financial claim on the issuer. Doesn't that make these tokens very different from at least the vast majority of ordinary securities? And if the chairman is right that most tokens should be considered securities, then as he himself states in his written testimony, and I quote, it follows that many crypto intermediaries are transacting in securities and have to register with the SEC in some capacity, end quote. But crypto transactions typically can be settled in real time on chain without intermediaries. As a result, crypto intermediaries often serve different customer needs, they've got different business models, and they pose different risks than traditional securities intermediaries. All of that raises the question, what is the crypto-specific roadmap for these crypto intermediaries to register? Stepping back, I think there's a larger problem here. As Bloomberg columnist Matt Levine put it, and I quote, Chairman Gensler's posture is that he should be in charge of writing the rules for crypto, but not write them. I just don't see how that can work, end quote. I think Mr. Levine has a good point. Given the novel nature of these tokens, really Congress ought to step in and provide clarity. In particular, we need to revisit the definition of security as part of a larger effort to tailor a regulatory framework that is calibrated to the unique risks and activities of the crypto market. As I've said, crypto tokens have varying degrees of decentralization. They usually do not have a financial claim on the issuer and typically can be settled in real time without intermediaries. These are very major and important differences from traditional securities, and they merit a clearly stated and tailored regulatory framework.